Hey, good morning, everybody, and welcome to the Steps to Soul podcast. Today, we're talking about the state of the market and selling your business in 2025, the key trends we've seen this year, and what we expect for the rest of the year. So, on that note, it has been an interesting year, Chris. I'll tell you what, we got some data driven points for y'all. We've got some anecdotal stories, and just we're going to lay out. It's been a different year. And if you're in the industry, you know it. If you're in the lender, you know it. If you've been a buyer or a seller, a buyer, you probably for sure know. If you're a seller, you may not realize it. So today's going to give you some great insights to what's really going on. And like this industry, it's been a changing. It's been 2025 has been a year. I'll tell you what, it's like passing the kidney stone I had this past weekend, Chris. It's been a little painful at times. It's been weird. It's been different. I've never gone through it. And we're going to tell you all the ins and outs about it. So at that note, let's just dive right into the key points, man. Like the market conditions. I feel like every year people talk about the market conditions, right? Everyone's always talking about the market. That could be interest rates. That could be availability of inventory on the market. That could be a bunch of things. But I think what people don't realize, and that me and you saw a trend coming because we've been doing this for so long, is I want to start with inventory specifically. And I don't think people realize how many deals got done from that right at the first part where COVID opened up to about midway last year. There were so many businesses on the market and so many got sold. And we can go into that a little bit and why that's changed to this year. But man, values, multiples were up, lending interest rates were low, and inventory was at an all-time high. And there's a culmination. They all kind of feed off each other. There wasn't this one particular reason. But if you look today out there, inventory's down. If you're a buyer and you're a searcher and you're out there looking, the number of business for sale is down dramatically, in my opinion. I don't have an exact metric number, but I would say almost 50%. What do you think, Chris?
Yeah, at least. And I mean, what you're seeing is private equity groups willing to take a look at the lower listings because there's not much available in their market. I'd say in $5 million EBITDA, there's less listings than there's ever been that I can find. So, yeah, for sure.
You're absolutely correct. And, people just got so excited to buy, and with rates low, absolutely. You could stretch your dollar further. Sellers could get a little bit more for the asking price, and it was a good marriage. SBA regulations, standard operating procedures, the SOP, as we talked about, changing a couple podcasts back, which went into effect, 4 days ago, June 1st? Man, you could do so much more. Yeah. That all got starkly swung back the other direction, back to the old ways, the archaic ways, in my opinion, and it's really limited deal structure. So a lot of sellers are scared to go to market, but I think that's the wrong take.
Yeah.
And that's not coming from the person selling them. I think it's because multiples are still holding pretty firm. They've been down a little bit, but that's due to financing and debt service. We talked about that. I think people, and we're going to hit this a little bit harder coming up, but people are ball watching. They're watching the market right now. We saw the stock market take those crazy dips with the tariffs.
Right.
Interest rates have kind of fluctuated. Where is inflation? New administration, all kinds of changes. Doge, you name it, it's been a weird first half of the year. And I think some of that carried over from the end of 24. I think time on the market, listings being out there is similar. I think it still matters closely to how you're priced, how you've done your valuation, and how prepared you are to go to market. And we've talked about that in all videos, having financials prepared, right strategic structure, yada, yada. We're not going to go back over that. But all these different little things kind of hit. And there are some industry hotspots that are still popular. Obviously, trade businesses, HVAC, plumbing, electrical, accounting's picked up a lot, HR, a lot of bigger groups are swallowing up firms where they can economies of scale and pull that into their organization for roll-ups, like you mentioned, private equity. But I think the biggest issue is inventory. I think people have been sitting around not wanting to sell because they don't know what's going to happen, right, Chris? How many conversations do we have weekly with owners going, I was waiting until the election. Well, now I'm not sure.
Yeah.
I think it's the wrong reasoning. I'll let you go first, but I have my reasons. Why do you think? What is your interpretation of that, and where do you see that going?
Yeah, it comes down to uncertainty. Since September of last year, in my personal experience, people kind of froze and said, "Okay, let's wait until we see where the November election, where that shakes out." And then after the November election, it was January. Let's wait till Trump takes office and see what all that is. And then literally felt like day one. Tariffs and uncertainty, and the markets are going up, they're going down, and it's just instability. And so people are waiting for that to be a little more stable. Even if you're looking at selling your business, and even if you wanted to retire today, I'm having conversations with those types of business owners, and they're just not ready to sell because they, maybe their retirement's not going to be stable after they put all that money in there. I
Mm-hmm.
don't know where that's coming from, where that kind of inability to move forward on selling. But there's not a lot of listings for that very reason, because we're having all these. I'm having the same amount of conversations I've had, but it's stopping at the conversation. It's not moving forward with the listing. And it's not just me. It's you can look at the marketplace, and like you said, let's
Mm-hmm.
go with 50%. That's probably a pretty good target number to say that that's how many listings there are less that are quality listings than we had last year. So uncertainty, that is number one reason.
I think you're absolutely correct. My dad saw it when he had the practice back in '08. I saw it, when we had it during COVID for a little while. There was some uncertain, people kind of froze. What I tell buyers is hold the line, because when people do wake up, it's going to be a wave back into the market. And I've seen it time and time again with my father running the practice for 25 years. I've seen it in my time here in 13 years. It comes in waves, and that's okay. The market shouldn't always be full of inventory. That's not a good sign. Markets have to correct themselves. I'd also like to point out too, I think a lot of people don't remember, but we had PPP money. It seems like that was forever ago, but it wasn't that far away, right? EIDL credits, retention credits, you name it. A lot of business owners got a lot of capital during that time, and it was great, and it paid the way. It also inflated their books. And now they're looking at thinking, oh, I'm worth less than I thought I was, or I wasn't making quite what I realized, because the credits inflated that value to them, right? Their bottom line. We got to add that back out, as we've talked about. And if you're out there listening, that's okay. There are still good buyers looking to buy. When we get good businesses on the market, we are getting a ton of activity. And I think you can speak to this specifically, Chris. You just listed an electrical contractor. We'll get into specifics of what they make in manufacturing, but what did we get, about 200 leads in a week and a half?
Yeah, people are hungry for
people
good
are
listings.
Hungry.
Yeah.
And I would tell somebody, would you rather be the one girl at the bar getting to pick the litter of all the good-looking guys on a date, or would you rather be one of 40 girls and one guy at the bar? Sometimes it's better to get out there and see what you're worth. You don't have to accept an offer. And I think sometimes sellers get too worried about waiting for the perfect time to sell your business. There is rarely a true perfect time. For those of you listening, there is rarely a perfect time. The time to sell is when you've prepped your books, when you've been ready, or when you psychologically hit that roadblock. Don't wait till you're past it and you're exhausted. You've run a marathon. Now you got to run a marathon to sell your business. Train, get ready, and take it to market.
Yeah.
Now, granted, if it was COVID and everything shut down for a year, yeah, maybe you wait a second. But that's not these times. And if you're out there listening, there are good buyers looking to buy. Yes, lending has changed a little, but I can promise you, when we get listings that are priced appropriately on the market, we're getting a lot of buyer activity, whether it's a donut shop, specialty detailing business, Chris's electrical contractor, manufacturing. There are a lot of things that are changing, that the industry is fluid. Private equity, you mentioned, has changed their parameters. People are looking to make deals happen, especially when the stock market is unstable, right, Chris?
That's
if
right.
Your investment isn't stable over there, you don't have a good CD rate, you want to put your money somewhere to make a return. And I see a lot of people looking at buying a business right now because they feel like that's a stable return. Would you agree?
Yeah, for sure. It's especially if you're going to work for yourself and you're going to be in control of your own destiny, it's probably more stable than getting the corporate job right now, or especially working for the government. I think we can all agree on that.
Yeah, I mean, look at people being forced to go back to work. No more working from home. Well, if you're going to work from home, why not own your own business, right? Control your destiny, get a return on it. And that's where I think buyers are looking too. The only thing holding buyers back right now, Chris, I think, is interest rates and financing. I think that's a key topic we need to discuss about the current market conditions. We all know rates are a little bit higher than what they were a couple years ago. I alluded to that earlier. And a lot of frenzy of buying, right? Lowest they've ever been. And typically we talked about, SBA is 2 over prime. So when you're getting houses for 2% interest rates, people are buying businesses 4 to 5, 6%. That's incredible.
Yeah.
That leaves you a ton of room for margin for error. And with the deregulating all the certain requirements for licensing and buyouts and rollover equity, man, we saw an explosion. So yeah, there should have been a lot of inventory taken off the market. But for the first half of this year, it's kind of been quiet. But I tell you, I'm seeing a little more trickle up with rates kind of holding or kind of even dropping a little bit. Lenders have kind of had a chance to reevaluate the SOP, educate the buyer and selling market on what's going to happen. And we even seen, we talked about this too, Chris, manufacturing. They may bump up to $10 million on the cap for SBA. And I think that could be huge, right?
Yeah.
And how much do we see in that space is getting lit up?
Right. Yeah, you have to have that certain NACES code for that to qualify for your manufacturing business.
Mm-hmm.
But I think it's like 44, 43, something like that. But yeah, SBA loans are still the backbone of Main Street and lower middle market deals. But like you said,
Absolutely.
rates are hovering right about 9% because prime's about 7. So like you said, to add 2% to that.
Mm-hmm.
So what I'm seeing is more creative deal structures are coming. Even if
Absolutely.
sellers aren't taking them, these buyers are coming in ways. They're coming in with offers and deal
Mm-hmm.
structures. What's happening is sellers haven't adjusted. They're still like, I still want to sell my business. I want 100%. I want to walk away. That's just not
Mm-hmm.
possible with 9% interest rates. If you're
You've
wanting
got to
that
be more
higher
flexible.
multiple, right? So you've got to, as a seller, you kind of need to loosen up a little bit during high interest rates time if you want maximum value. Maximum value doesn't always mean 100% of what I want cash at closing. Sometimes it means an earnout or a little bit of seller financing and get that
Mm-hmm.
interest rate. So
An employment agreement for a short
absolutely.
term.
So you
Yeah,
got to kind of hit that mark with some help of being creative in that regard.
you're not wrong. And my dentist who I saw a little while back was like, "Did I miss the wave on the 10x for dental practices?" I was like, "No, you didn't miss it." What happened is everybody finds a niche. Private equity hits a jackpot on a certain industry, and what does everybody do, right, Chris? They flood to it.
Yeah.
There's still going to be good buyers out there. You can't be afraid you missed a wave. If you price your business appropriately and you get it prepped, it's going to sell for a good price. Let's be honest, it will. When we get good financials and you're prepared and you price it appropriately, you're not trying to strangle a deal to death, and you're a little flexible, you can get a really, really good deal.
Yeah.
And I think people don't realize that even in tough times, good deals still happen. But you have to come in with an open mind and not be afraid to listen to offers. It doesn't mean you have to accept it. It doesn't mean they're going to be perfect. We've got about 15 to 20 million under contract right now, Chris, in our network. All different kinds of deal structure. Buyers are looking to do something. They've got capital. They've sat on it. You're there. If you go to market, you're going to get attention. And you don't have to do anything you don't want to do. And I stress that to sellers. We see so many get nervous right now. We've seen a lot of restaurants in New Orleans close recently. We've seen some other industries take a hit. Hold the line. Get ready. Because when the buyers come in and there's only so many people available, you're going to get the best look. You're going to get probably the best offers because you're the only one they can acquire.
Yeah.
So that leads us to buyer behavior, Chris. We talk a lot about interest rates. What are today's buyers looking for? We've had an evolution of the search fund buyer, right, Chris? How often do we get emails from those guys?
Oh yeah. All day, every day.
They're like a kidney stone sometimes, some of them. You got to pass them through because, man, they are in waves and they've all been taught different ways, and some good, some bad. But if you're one of those buyers out there, listen carefully. We talked about how to make yourself stand out with George Wellmer from Tupelo a little while back on the podcast and gave some great insights. I know he's speaking at a conference this week to searchers. If you're coming at this wanting crazy creative financing, stop. Yes, rates are a little bit higher. Your offer is going to have to be a little bit lower than what it was in previous years. Sellers need to understand that. But buyers, you can't be afraid to do a deal. And I think right now there's a lot of buyers that, with the market uncertainty, they want to pull the trigger, but they want so many guarantees to do it, they're strangling a deal to death. Do you see that too, Chris?
Yeah, for sure. They're looking for, I had an offer the other day. He wanted 75% seller financing. That's just unreasonable.
It is.
And anything I'd say above 20% is, in my opinion, is unreasonable unless there's a valid reason for it. If you're not coming with enough cash to closing and have a lender that's willing to back the deal fully, that's probably at least my listings. They're not for you. Now, if you're calling business owners on your own and hey, you find a diamond in the rough, maybe it works out, and maybe that's why these guys do that all day, every day. But I think when you come to a broker, especially in the Sunbelt network or a valid brokerage firm, that's kind of offer is not going to fly.
No, you're right. Especially when there's more assets than what you're putting down. Because if that's the case, you can get a conventional loan for the assets in a lot of cases. Not every time. Don't quote me on that, but you can.
Yeah, they're going to.
And it's also not worth the owner to take that offer because he could just liquidate and not have any headache, right? Yeah, that's he will get the seller finance note, but there's no risk. We had someone debating this the other day about, what about structured earnouts? And we I've seen a lot of buyers bring that up lately. That's tough because he who holds the calculator can rewrite the rules. We actually got an offer in our North Shore office the other day, and a deal that involves some form of an earnout. Sales for a certain category of a customer had to hold around $75,000. Well, look, all that person's got to do is say, all right, see, I'm getting close throughout the year. Just make sure I don't show that P&L to the owner at month 12, even though I'm billing them, I haven't received it yet. How do you judge that, right? For about 20% earnout of the deal. You could easily withhold that and say, oh, I can't pay you. Didn't show up, right? Because I hold the calculator. Am I wrong? I mean,
yeah.
I just don't think those are easy ways in proper ways because it creates friction. If you believe in a deal, get your reps and warranties. Stop trying to get overly creative. Guarantee the seller note. Give them confidence in you. You get confidence in your asset purchase agreement. Do your due diligence. And buyers, it'll be okay. Just, I can't promise you it's going to be perfect, but if you do the right process, you're going to be in a good position to be successful typically. Now, if you don't, then to yourself. So what are buyers prioritizing? Let's talk about that a little bit. What I see, Chris, is they want guaranteed contractual revenue, which you could say they always want that, but I see a highlight in that lately. Key employees more than ever. And what I also see is something that's scalable. Before, people always wanted a good business. I think now they want one that they can truly grow more than is limited. That's why I think restaurants are hurting. If your restaurant is only 2,000 square feet, you can't just magically add tables, right?
Right.
You can't just make, unless you turn them quicker.
Yeah.
So what I see buyers looking for more and more scalable businesses and ones that they can, they want the unicorn that makes money, nobody has to work at it. That's not real. If it is, we're going to buy it. But that's another story out there. What are you seeing they're looking for? What are you seeing? Because I see the scalable ones has been the most common lately of, hey, if I'm going to roll the dice with these higher interest rates, I need to be able to grow it quicker. What are you looking? What are you getting?
No, you're right. Scalable is the end result that they want, but before that comes the predictable income, right? Because that's how you scale it. You've got this predictable
guaranteed
income.
revenue.
How do we market this? How do we make this more national? How do we grow it? So recurring revenue and automations are top priorities that I'm seeing. These smart buyers, they're thinking long term. Just like you said, they're looking, how can I
And they should be.
They're not looking to buy businesses and say, okay, let's just make the same cash flow it's making now and we'll pay it off in 10 years and make some money out of it. That's not the game plan for most of the buyers that I'm working with. So, having a plan for a seller of selling the business and getting all those things aligned so that you've got this predictable income. So a buyer sees you as a more desirable target. That is key for sellers right now.
I agree. And I would even add to your point, you mentioned they want to be able to scale it to make more money down the road. They have to with these creative financing structures we highlighted. That seller finance note, some of those are kicking in, after year 2 now. Well, if you have another note that jumps on to year 2 and you haven't grown the business or it can't be scaled, you're going to make less money in year 3. You can't grow it. And that's a problem.
What about a balloon note due at the end of year 5? There could be this massive.
Exactly.
You're amortizing it over a 10-year period, the seller financing portion. But most sellers don't want to stick around for 10 years. So usually you amortize it on a 10-year period to kind of help the buyer, make some cash flow and grow the business at first. But what I usually have in mind is a balloon note due at the end of 5 years, if the SBA loan agrees with that. And that can be a kind of an upcoming nightmare for a buyer.
Especially if you haven't grown the company.
That's right.
I think that's where a lot of people, that's what we mentioned, that scalability is so important, ability to expand it in some capacity. A deal we're working on, specialty products business, the father and son are going to buy it, and their goal is to expand it throughout the Gulf Coast. They said, look, it's doing great now, but if we can take it to a little bit level higher with the scalability and the low cost of goods that this business has, where they can make their own product in some cases.
There you go.
Man, what could this thing be worth in 5 or 10 years?
All right.
Now, granted, they don't want to get rid of it then, but maybe you get approached for a great offer. Maybe you don't, but that's where your value is. And that's why you leverage your capital with the SBA to do deals. And that's what buyers are thinking more and more now. They're not just looking to buy a job, right?
Right.
10 years ago, a lot of people use SBA to buy a business. They could have a good job, make more than they were making previously, but it was stable, right? It was a good business. It was easier. They don't want businesses making less than $400,000 or $500,000. It's not worth the risk. And I think that's another point about the market we need to talk about. There's very little under 500,000 right now of major consequence. Why is that? Well, to sellers, this is going to hurt to hear this, but buyers don't want your business that much anymore. Not always, but in a lot of cases. Why? Say you want $300,000 for your business, Chris, and you're making 90 to 100. That's a lot of risk for a buyer to take on that doesn't know your industry. When you can go down and work at the state, get 80, 90 grand a year with benefits, right?
Yeah.
No SBA note.
Yeah, not only that, for the larger buyers, it's hard to invest the amount of time and energy up front that
and
is
the cost
required.
Of the SBA loan. Let's not forget that too.
There's not much difference in cost if you're going to do the proper due diligence. Yeah, you're probably not going to do a Q of E on a $300,000 business. In fact, I'm going to
But
bet that
man,
you won't. But you still got
yeah.
to pour the same amount of, hey, how does this business work? Who are the employees? Who's sticking around? What does the financials look for the past 3 years? You're doing all
Mm-hmm.
that for, to make a little bit amount of money. It's not going to happen. That's why you have these private equity groups. They have their minimum targets, right? Usually $1 million
Yep.
seems to even be creeping up. But lately, like I said before, I've seen them kind of coming
750 kind of at the
down a
bottom.
little bit because there's not much in their level right now.
Yep. And they want all the ropes they can get because they've bought so many of them.
Yeah.
And I'll even say this too about state of the market that we didn't discuss. We mentioned lending, but the small deals are hard to finance right now. With the rates where they are, there's not enough cash flow meat on the bone to make debt service make sense.
Yeah.
And we talked about risk tolerance. Buyers have risk tolerance right now. It's smaller. We actually did a conventional loan for a local hardware and mini storage business here in Southern Louisiana just last week. The buyer, only reason he got a conventional loan because it was, one, the business had real estate included, a lot of hard assets, and he has 2 other businesses. So he had a lot to leverage in the bank. Obviously, small town bank, knew the business, did the books and the loan for the current deal. So they were happy to kind of roll it back over because, 1, they're saving the business, and 2, it made sense for them. And he bought it as an investment for one of his family members to run. But that's not very common. And those are hard to find.
Right.
They are. You had a deal that, unfortunately, there's a lot of those out there that we can help save, but we can't save them all.
Yeah.
And like I would stress to those people, keep your books clean. Get it as pristine as you can because you're only going to get a 1-2 shot, really shots to sell that business. So sellers listening out there, if a good buyer comes and offers you, be very, very serious and be flexible because you may not get another offer. Just point blank.
Yeah.
So that kind of leads to our next kind of major topic here is seller sentiment and the common mistakes that I'm seeing out there. This is going to sound harsh, but let's address the elephant in the room here with sellers a little bit. We've said how many times prepare your financials? I've said it, 6 times on the podcast, right?
Right.
I mean, I think if you haven't heard me say it again, prepare your financials. But sentiment of sellers, right now more than ever, we always say be flexible. We always say be open to deal structure. Doesn't mean giving your business away or taking unnecessary risk in a deal. But if your thought of retirement was now and you're waiting, we see a lot of sellers. Let me take a step back. We see a lot of sellers right now saying, I was going to retire, but this, and this happened. I'm not sure. Let me tell you this. Look to get on the market sooner than later. It's better to be ahead of the wave when the buyers and rates update and you catch that wave going forward than trying to jump on the back of the wave with the surfboard because it's not going to work, right, Chris?
Right.
You want to have momentum pushing you forward. The first half of 25, Q1 and Q2, it was rough out there. There were deals getting done. Don't get me wrong. There's still business being bought and sold in a fair amount. But as long as I've been doing this for 13 years and my father did it for 25 years, typically these waves, when they were slower, were about a year in length, give or take. We saw it slow down. You said, July of 24? Where are we right now? It's June 5th?
Yep.
That year pause is starting to happen. And we talked about this too. Administration changes, Republican, Democrat. Very volatile politics these last few years. We've seen it every year leading up to the election. People kind of, rightfully so, different industries, oil and gas especially. I would have thought there'd be more oil and gas on the market right now. Wouldn't you, Chris?
Yeah, we didn't quite hit the drill baby drill that we were hoping. And, I listed a business back in November in oil and gas. And that was kind of our expectation is when the new administration came in. And yeah, he's pro oil and gas, but we really haven't had a course correction or change or ramp up or anything. I haven't seen any new activity in our area.
I agree. And we're an oil and gas state. Let's be honest.
Oh, yeah, for sure.
South Louisiana, we are LNG, natural gas, oil. We are, let's go, baby. I mean, and granted, it takes time for the trickle-down effect. So they drill to the service businesses to help support it, well plugging, pipe fitting, you name it. There's 100 of those. But getting on the market now, getting ready, even if you don't want to list your business, let's say tomorrow, right? Say you're a seller listening right now. Man, I want to sell early 26. Now is the time to talk to us. Because if you wait till it's time to sell, then you come to us, we got to do an analysis. If there's any issues, we got to fix them. You're looking at Q2, Q3, really getting the ball rolling in 26, especially if you're a larger company. So it's time to talk to somebody and get prepared. And I stress that because not that we need inventory. We've got business to sell. Let's be clear. We're not like we have nothing to sell, guys. All right. The market's still in some degree rolling in some areas. But I would stress to you, start preparing now. So if you want to go live at the end of the year, you're ready.
Yeah.
Because then you can catch that next wave. And I think that's so important. I saw it since I've been working here. My dad did this for 25 years, told me those same stories. You'd be surprised if you came on the market right before the wave hit and you caught it. Man, you got a hell of a bunch of offers. Be the only girl in the bar, or be one of 40 girls in the bar and one guy left standing, right? Looking for a dance partner. There's only so many good buyers out there. What I mean, is there anything you want to add to that? Or am I wrong? Am I misspeaking? Like, I feel like I'm repetitive, but I feel like I'm doing that for a very specific reason. Is it overkill here? Or am I just being crazy trying to stress this to them too much?
No, you're dead on. Like I've had a lot of conversations lately with sellers, so my seller discussions are way up for me. But my listings are not.
Same here.
What's driving those conversations? I constantly hear is the desire to either retire, their burnout, whatever the case may be. But that's not equaling in the listings because of that uncertainty about the economy, about unrealistic values. The seller, these guys, they're still kind of stuck in 2 years ago when things were really, level and things predictable. Let's put it that way.
All the 10x multiples, right? I got 10 times my earnings.
Yep. So I've been coaching a lot of business owners who aren't clients yet to treat the listing process like preparing for an audit. Like you say, like you preach, get those things ready, button up your financials, make sure they're defensible. That way, when you do go to market, you've got everything lined up. But yeah, so conversations are up. People are hesitant. But now is the time to prepare so that when you are ready and when maybe the market stabilizes a little bit, it's the perfect time for you.
I agree. And let's talk a little bit about multiples and businesses that are kind of coming on the market now, because we didn't touch enough on that. And I would like to put an observation I noticed. My dad always told me, and granted, I'm quoting him a lot today, but he was a wise man, been around a long time, did this for many, many years, very successfully. People, when leaving the marketplace due to instability, let's say you're in your 50s or below, you've been in corporate America, you've been in a bigger company, they're looking for not just to buy a job, but something they can scale. We talk about scaling a business, right? Well, what businesses are easier to scale? Ones with proven models. What kind of business have proven models, Chris?
Franchises, for sure.
Bingo. Spot on. Have you not noticed a massive uptick in franchise availability or franchises pushing to get out there?
Sure.
Do we deal with a lot of startups? No. But I will tell you, if you're a franchisor out there and you've considered selling, now may not be the worst time to get on board with looking at it. I see a lot of those franchises. And look, lenders like franchises. They've got proven models. They've got typically clean financials. They have better POS systems. Franchisor does training. There's more built in for that buyer to be successful long-term as a proven model than Joe's Garage or Jimmy's drilling business, right? I mean, it's considered a proven concept. Doesn't mean every location is great or is going to last. But I'd like to point that out to people listening, that there are good franchises coming on the market. And I see 1 in 3 listings coming out are probably franchises or even startups they're advertising, which they should be putting them not on BizBoss Sales and Active Listing. That's another day we're going to get on that conversation. But as a buyer out there, you may not be able to find a mom and pop, but you might be able to find a good franchise. They might have a little bit higher capital requirements to get in, but you can still get very good lending on them. So the buyers that they're listening or sellers in the franchising space, now may be a better time to sell than you might realize, because those opportunities are going on. So don't be shy. The final thing I'll say here, don't be shy. One thing I noticed too, I mentioned multiples, and I don't want to go on a tangent, but I want you to touch on this too, Chris. We heard a lot, I got a 10x multiple for my business, right? It didn't always count in for the rollover equity, didn't account for the real estate being included. We could go on criticizing it. There were some 10x deals going on. That is true. But I think as a whole, multiples are, to the most part, held somewhat firm. I saw Biz by Sales report where multiples are kind of held a little wave, but they've held. Have you seen a difference in really people applying them differently? Because I haven't seen the offers that have been coming into us that multiples have really changed that much. It's more the debt service that's killing it or dropping it just a smidge. Are you seeing the similar trends?
No, it's a supply and demand thing. Because there's so limited supply out there, buyers are having to pay that multiple the same as they were before, because if you're not, the seller's not going to sell his business to you.
Mm-hmm.
So, yeah, multiples probably should come down because cost of capital is higher at 9% interest rate. But
Mm-hmm.
with limited supply, buyers are at a disservice and they're just having to kind of cough it up. Now, what's happening is, like you said, they're paying more in debt service than they're actually taking home and putting it in their bank account. But it's a kind of a give and take right now.
I've noticed that a little bit too. I struggle with some of these sellers saying, well, I got 10X. I'm like, well, okay, well, show me who got the 10X. Well, so-and-so down the street. Well, we've seen the comps. I don't think they got a 10X.
Yeah. No,
You might be getting BS a little bit. I mean,
no, nobody can afford a 10X right now, especially if you're going to use SBA loan and kind of go that, even if you're going to put down
the lower
15,
middle market
15,
space.
20%,
Mm-hmm.
but if you're going to put down the 10%, hitting a 5X is terribly difficult, right? Usually the debt service eats it all up by the time there's anything left. If you're going to put more down, then there's less debt service annually. But yeah, anything above a 5X is really a private equity buyer coming in with cash that's not worried about debt service at all.
And typically that business is probably a 2 to 5 million EBITDA. It's not going to be 2 million or below. It's just not. And I feel like my dentist mentioned, he said, well, that's why they got 10X. I'm like, it's not really 10X. And if they're paying you 10X for what you're doing right now, take the money and run. Don't call me.
Yeah, I think when you hear something like that, you got to wonder how much longer are you going to work? How do they have to grow the business? Are you sharing in that, or I seriously doubt that would be a cash at closing 10X. Here's your check. See you later kind of deal.
Bingo. Total consideration at close in cash. Not always the same thing.
Yep.
So that brings me to another point. I want to talk about our industry a little bit. I know maybe don't want to hear about what's going on in our world, but I think this is going to be some good insights for y'all. Brokers right now are still getting a lot of leads. Would you say we're still getting a lot of leads for what's out there? People are still inquiring. Is that true?
Sure. Absolutely.
You think the quality of lead has gone up a little bit?
Some days.
Fair. But I would say this. I've noticed that buyer education has increased. So
Sure.
there has been some increase in people asking for the proper items.
Right.
More people ask for SIMs. More people understand NDAs. There's still some that make illogical decisions and fight us on that, but they'll never buy anything, so don't worry about it. Right? That's what I tell my guys. If they don't want to sign an NDA, they're not a serious buyer. Let's be honest.
Yeah.
If you don't do that, you don't want to buy a business. And you probably never will. Just point blank, you're not going to. You want to go buy a franchise? They're going to ask for a background on your capital. They're going to ask you for a background on what you make, your net worth. So good luck, right? The bank's going to ask you. Right. The SBA is going to ask you. You can't navigate that road without. That being said, platforms are advertising, at least I know some of the business for sale sites, BizBuySell, BizQuest, LoopNet, CoStars Group. I know it's business for sale, DealStream. Buyer leads are still rolling in. And I know I mentioned it earlier, but I want to highlight to people, we're still having a lot of seller calls. If you're out there listening, there's a lot of sellers just like you calling us saying, hey, I'm interested. I just don't know where to start.
Right.
And I want to share these insights with you because you're not alone out there. These have been a weird year, right, Chris? I mean, we've seen crazy tariffs, drone attacks in Russia, all kinds of stuff in the war in Ukraine. I mean, it's been a weird year. But we talked about this early in I think, Q1 of 25. There was going to be some pain with this to start. But when that wave lifts, watch Q3, watch Q4. We've got 4 or 5 deals about to close in the next 4 or 5 weeks. We just closed one last week. We got a new offer and acceptance coming in this week. That didn't happen in March and April.
Right.
But now it is starting to, that wave, I see a wave building. Now, maybe I'm wrong, but I'm not in charge of the Fed. But I would stress to people out there, it's coming. And when it does, be prepared, be ready, and get ready to do a deal. Because I see a lot of lending changes coming. SOP changes won't happen once every year and a half. They've already mentioned manufacturing changes are trying to change. I expect more of that, maybe not overall policy change, but some niche industries to get more support because the federal government wants business to stay open, right, Chris? Because what does that generate?
Yeah.
Income, taxes,
tax revenue,
jobs. That's right. How do they do that? Growth. Businesses staying open. That's coming. What do you see for the next? Let me ask you, what is your real prediction for Q3 and Q4, especially both of them? Do you have any real specific hard takes?
I'm going to say the same thing that I kind of saw after the last election is there were 4 or 5 months after the election where things were still frozen. And I don't think much changed even after the 4 or 5 months, but people just kind of became comfortable with the new norm and they were tired of sitting on the sidelines. So I think you're going to see sellers and even more buyer activity through Q3, Q4 this year, right into 2026. I think we're all kind of just okay. We're accepting that this is the new normal. We're going to deal with these tariffs. We're going to see the stock market go up and down. Let's just get comfortable with it. We still got to go make money, got to pay our bills, got to grow. So eventually, it just like okay, let's just keep trucking.
No, you're not wrong. And it's funny. Late last year, everybody talked about, oh, what's the Trump administration going to do? Funny how by June now, no one even mentioned the administration. And they're just saying just the government. It's funny how every year it's like this administration is going to make a massive change. And then 6 months later, it's like, it's just the government. Nothing new.
Yeah.
Just like you said.
Chaos as usual.
That's well said. Chaos is just new spending bill, new hold up. I mean, guys, we've heard it 100 times.
Yeah.
I was at the IBBA. I was at the Sunbelt annual meeting a couple weeks back. Same sentiment. Like everybody said, it's just a lot of holding patterns. And that's okay. If you're not sure and you really aren't ready, don't go on market if you're not ready. Let me show. If you're not ready, don't go on the market. Right, Chris?
That's right.
If you're not committed and prepared and are going to be engaged to go to market, don't do it. Because then you're going to probably pass up a good opportunity. I've had a couple deals this year where we brought 95% of asking price and people countered and they lost that deal.
Yep.
They weren't maybe fully psychologically ready. I see that all the time. It's like, and we stress that. In a market like this where buyers are hot to go, you're going to see IOIs, indicators of interest. You're going to see LOIs coming in very quickly. If you're not ready and not prepared, you might get blown by. Or worse, buyers are going to write you off. And when you do get it ready, they're not going to want to have that second conversation. Have you noticed that? Because I've seen, we talked that with a couple of your listings. It's like all of a sudden, buyers like, I demand to have access. Am I wrong?
Right.
Qualified or not.
All right.
So I'll stress everybody out there, be ready. Find out what your multiple is. See, and if you're curious and you're a seller and you don't believe me or Chris, go on Biz by Sell. Go on our sunbeltnetwork.com. Look at our website. Look for other people in your industry, what they're selling for, what they're asking. Look at the market. See, you may be the only one in your state or in your metro region that's available like that. You're going to get a lot of good activity.
Right.
Do some homework. You don't believe us? Do your own homework. You believe us? Call us. You don't believe us? Call us. We've got great stuff. Love to help you. We'd love to help you prepare and give you good, honest advice. Because at the end of the day, you've got the biggest decision of your life to make as a seller and as a buyer too. And being prepared and ready and listening to this podcast is going to get you there quicker than later. I can promise you that.
For sure.
Anything else you want to add, Chris? I know we've hit a lot of good topics. I know some of it might have been a little vague. We might have stressed a couple topics more than others, but we're doing that intentionally to tell y'all the market's going to be okay. And we're here. We're not going anywhere. If it was that bad, we wouldn't be here, right? I mean,
that's right. No, but if you're a seller that's even thinking about selling, 2026 is even your year. Reach out to Brandon or myself. Let's have a no pressure consultation, completely complimentary. Let's get a business valuation going. Yeah, even if we do a business valuation now, we can update it quarterly, annually.
That's right.
Whatever you get the process started so you know where you're at as far as what your business is worth and what it possibly could get on the market. And then when the timing's right for you, pull the trigger.
Well said. I stress that to people, and I know it sounds like broker talk. Broker saying that, wanting to get a listing. We're honest, and we're telling you this so sincerely, it's in your best interest. And I know it's easy to, we act as fiduciary. We get it. But for us to maximize your return, listening today, taking those steps, that's going to get you there. Again, I'm going to say this. There's no perfect time to sell. There rarely, if ever, is. Be ready. Get ready. Luckily, you've had time with the slow wave buyer pent-up action. That's the best time. That's close to the best time to go to market because you're going to get all the activity you need to make an honest decision and get honest feedback, what you're really worth to the market too. No matter what your books may say, no matter what you think you might be worth, the market is going to be honest and be ready to capture it. On that note, it's been a great episode today, Chris.
Yep.
Thank you for sharing. I've had a good time. I felt good to get some stuff off my chest. I feel like if you listen, you felt our frustrations and just trying to help people get ready. But man, don't miss out on Q3 and Q4. If nothing else, start preparing. Because I guarantee you, 26, you can mark me on the calendar. I called Rory winning the Masters. I passed a kidney stone this week. I'm feeling good now. Watch out for 2026. I'm telling you, the wave is going to come. Even into Q3, Q4, I'm going to make a hard call right now. And we can revisit this later in the podcast down the road. Watch activity change. I'm really curious in Biz Buy Sell and other people put out those reports at the end of the quarters. I'm going to come back and remind me, Chris, we're going to update everybody how those numbers went up. I can promise you.
There you go.
On that note, I'm Brandon Bourgeois. That is Christopher Sater. We enjoyed having you on the podcast today. And next time we will see you and hope you have a good one.